Term Provider has helped thousands of people like you who think they can't afford term life insurance. To buy $1 million of affordable term life for you, all you need to do is call Big Lou at 800-555-1509. Lou will make sure the scales are tipped in your favor. Call 800-555-1509. Big Lou will answer your call and work to fit you into a term life policy that you can afford. Remember, Big Lou's like you. He's on meds too. Call 800-555-1509 or biglou.com.
Broadcasting from the Kanowski-Bresney studios comes the radio medium Laura Lee Show.
I feel like you had to let him go.
Yes, it is. He was on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
From the other law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Apply for Social Security and Medicare. Mike, one of the many questions that people have as it relates to Social Security and Medicare is, what's the difference in terms of how much I earn based on when I apply?
Yeah, and there's plenty of confusion around all this because the ages have changed over the years as we've made reforms to the Social Security program, and there's different ages for Medicare and Social Security. So first things first, for vast majority of folks now, 67 is the current full retirement age. for Social Security, whereas 65 is the eligibility age for Medicare. And then you scale up or down your benefits depending on how much earlier or later you claim when it comes to Social Security.
An important thing to note, you don't have a do-over on this. Basically, when you claim Social Security, that is what you are locking yourself into. The programs where you used to be able to adjust that, they haven't been around for a while now.
No, and so, for example, if you end up claiming your benefit at 62, in addition to having penalties for how much you get in earned income, you're going to be collecting about 30% less than your full retirement benefit, whereas if you wait all the way until age 70, you'll be collecting about 124% of that full retirement age benefit.
Our guide is titled How to Apply for Social Security and Medicare, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here. And ladies and gentlemen, we have a new nominee for chair of the Federal Reserve. It is one of the Kevins. Kevin Warsh is the new nominee from President Trump to run the Federal Reserve beginning in May. And so we're going to spend a little bit of time talking about who Kevin is, what he generally thinks about monetary policy, some of the things that he said recently, and then talk a little bit about the path for him to be confirmed, since there's a little bit of drama on that side. But, ultimately, I think where I land on this, Mike, is I have a couple thoughts that, again, I contradict myself a little bit in how I think about this, in that I'm a pretty big believer that regardless of, who ended up in this position, as long as, it wasn't someone entirely unexpected, I don't really think it's going to have too much impact on markets, just because, the Federal Reserve Chair is just one member of the voting committee. Yes, they try to kind of corral people into, their own view, but ultimately every person on that committee is pretty smart to begin with. Every person on that committee has their own career that they're thinking about and looking out for, and everyone on that committee is ultimately not wanting to be remembered as the next Arthur Burns, and so they generally tend to do the safe thing, which for the last 40 years has been, let's be dovish.
Yeah.
Because pretty much...
relatively safe.
Look, let's be honest here. There hasn't been a Fed since the early 1980s that has actually been hawkish in any way, shape, or form when push came to shove.
Again, dovish here just means in favor of lower interest rates, and especially when there's any sign of economic turmoil, pushing for those lower rates and buying, in this day and age at least, expansion of the balance sheet to bring longer term rates lower too.
So it's just been a case that's been the kind of standard operating procedure. So let's look at this then in the context of Kevin Warsh, who, if you don't know anything about Kevin Warsh, Warsh is someone who is familiar with the workings of the Fed at this point.
He's an insider.
He's as insider as you can get. He grew up in New York. He went to Stanford and Harvard. He spent 7 or 8 years at Morgan Stanley. And then President George W. Bush nominated him to the Fed in 2006. And he's basically been in that orbit ever since.
And I would say that he served at the Fed in arguably the most interesting and transformative time for the Federal Reserve in its history.
Yeah.
I mean, again, there's probably a few other times where you can argue it, but he served as a member of the Fed during the Great Recession. And there's probably no time in history where the role and responsibilities of the Federal Reserve changed more than that period of time.
Yes. Now, if you want to talk about Warsh's tenure at the Fed during that period, it's one where he generally was about as hawkish and as I'm trying to think of the right word there, because hawkish is kind of reductive. He generally believed that inflation was the greater threat during the period he was at the Fed than weakness in the labor market. And unfortunately, he was basically wrong all along. And fortunately, Wikipedia grabbed some of these quotes, so I don't have to pull them from a bunch of different places. But these are all quotes from 2008. On the inflation front, there's little reason to be confident that inflation will decline. There are reasons to believe that our inflation problems will become more pronounced and more persistent. So that was early in 2008 when energy prices were going up. Understandable. September of 2008. I'm still not ready to relinquish my concerns on the inflation front. Unfortunately, you should have been, because the entire economy fell apart the next month.
Yeah.
So this is something where I think in looking at Warsh, again, all of us are wrong at some point. I'm not trying to be he's wrong, he's dumb. It's more no, he was someone who was very hawkish, even in the face of the greatest threat to the labor market that we have seen in 100 years.
Agreed.
And so I think the question that's an open one is, for the last year, he has written in a number of op-eds and given a number of interviews, basically doing a complete 180 from there and being as dovish as possible.
Yep. Lower rates. They need to come down now. Fed is behind the 8 ball. There are threats to the labor market, lower rates today.
And so I think the question that is a couple questions worth asking. If I were on the Senate Banking Committee, or if I were, a senator looking to confirm him, the question that I would ask, number one is, hey, when you were actually serving on the Board of Governors, you were very hawkish and consistently viewed inflation as the greatest threat, despite inflation never reaching, levels that most Americans considered to be problematic.
And I'll also say that's not the only time just to move. It's one thing for you to be wrong 15 years ago and change your viewpoint on things.
Through the 2010s, this was the same thing.
And then as recently as 2024,
yes,
he was criticizing Jay Powell and the Fed for lowering rates during the Biden administration when they were saying, hey, the labor market's showing signs of weakness. And so he has held this view very consistently that rates need to be higher and inflation is the bigger threat until President Trump took office the second time.
So I think the question that I would ask is, look, given your track record, both in terms of what you've said and how you've actually acted and voted on, the Open Market Committee in the past, talk to me about how your views have evolved to get you to the point where you are now.
Yeah.
Because I think it's important to understand. Having said all that, I keep coming back to my original point, which is I don't think that a Warsh Fed is going to manage things that differently from a Waller Fed or from a Rick Ryder Fed or from a Scott Bessent Fed. Because when you get into that chair, you basically sit there, and the first thing that goes through your head, and this is, by the way, in any job, if you're anything like me, first thing that goes through your head when you're given any kind of responsibility is, gosh, I hope I don't screw this up. And especially in that role, it's, no one wants to be Arthur Burns, because what everyone remembers about Arthur Burns was that under his tenure in the 70s, inflation rose to, incredibly high levels, not once, but twice, and the economy generally sucked during that time as a result of it. What people don't remember about Arthur Burns was that he was actually a brilliant researcher who many of the ideas that we talk about today, he helped develop in the 50s and 60s, and that's not really something that we discuss because all people want to talk about when they think about Arthur Burns is, you were the guy who let inflation get out of control. It's kind of like Bill Buckner. No one remembers that Bill Buckner was a pretty good hitter and actually a really good fielder. They remember the ball going through his legs, and unfortunately, that's like his legacy. Same with Arthur Burns. So I think that when we look at the actual impact that a Warsh chairmanship, is that the word?
Sure.
It is now, if it wasn't, that a Warsh chairmanship would have. I think ultimately, I'm not sure it's that different from anyone else, and here is the way that I get to this. If we look at the end of this year, the last Fed meeting is on December 9th. We know that prediction markets, which, by the way, have been completely wrong about this for the last couple weeks, okay, prediction markets didn't pick up on Warsh being the favorite until last night.
Yeah, last night it was about 80% odds.
So here's what we've got. A week ago, there was a 32% chance that the Fed funds rate would be cut by 0.5% by the end of this year. As of today, it's 33, a 1% shift. There was a 17% chance that the Fed funds rate would be cut by 75 basis points by the end of this year. It's up to 22, so a 5% shift. There was a 5.5% chance that the Fed funds rate would be cut by 100 basis points by the end of the year. It's up to 8.6. There's no meaningful repricing of, lower interest rates. It's like, okay, maybe there's like a 5 to 10% chance that rates go a little bit lower. But the market is telling you, hey, we don't think that Warsh's nomination is going to result in the Fed actually cutting more because he's just one person. And I think that's where I come back to, which is, look, regardless of candidate X, Y, or Z, I'm just not sure it makes that much of a difference in how the Fed is actually going to operate with what is most important here. Quick break. When we come back, do we want to do any more Warsh talk?
I think there's a little bit more there just in terms of what you're getting here. So I'd like to continue with a little bit more Warsh talk in terms of his history, his viewpoints on monetary policy, the Federal Reserve, what it is that they do, what it is they should be doing, and mistakes that they've made over the course of the last 2 decades. That's next on the Financial Exchange.
Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-5800. 800-393-4001. That's 800-393-4001. Or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your days snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Experience America's Caribbean and fall naturally in rhythm with the heartbeat of the islands while enjoying incredible beaches, world-class cuisine, and unforgettable sunsets. The weather is perfect all year round, so head to visit usvi.com and book your trip to St. Croix, St. Thomas, or St. John. Enjoy one or all 3 and enjoy the vacation of a lifetime. The USVI is America's Caribbean paradise. Plan your winter escape now at visitusvi.com. That's visitusvi.com.
So we're talking about Kevin Warsh being nominated by President Trump to be the new head of the Federal Reserve. Mike, you said you had a few other things that you wanted to cover as we discuss this.
Yeah, so like I said before, he was active in the Fed during the financial crisis. And so because of that, I mean, like I said, he was active there during one of the most interesting times in history at the Federal Reserve, where there was a massive leadership vacuum about the economy, and Bernanke filled that gap. And I mean, the guy was on TV like every other day trying to reassure the American public that everything was going to be okay. And one of Warsh's opinions is that the Fed really let Congress off the hook when it came to the actions that they took during the great financial crisis in terms of expanding their responsibilities and buying bonds. And he viewed that as a mistake, even though he did end up voting with Bernanke on a bunch of the measures. He really criticized it immediately afterwards, and it's brought up in Bernanke's own book and many other places. But I find that argument to be fascinating. I think it's undoubtedly true that had the Fed not taken the actions they did in 2010, the economy would have stayed much worse for longer. I don't think there's much of an argument against that. I also do think that letting Congress kind of off the hook now in 2 of the last big financial crises, I really do view the Fed as allowing Congress off the hook to some large degree, both in 2020 and in 2008, by doing the things that they did, right? By the Fed going in there and saying, hey, we are going to backstop the corporate bond market during 2020. In 2008, by dramatically expanding its balance sheet, it made it so that Congress didn't need to pass laws to shore things up in a bigger way. And I see that expansion as having been pretty consistent over the last 2 decades of Congress kind of abdicating economic responsibility in favor of just making the Fed deal with it. And I get why you want to do that, because it's really tough to get reelected after bailing out banks and doing those things. But the reason that the Fed is so prolific is because of this expansion over the course of the last 2 decades. And I'm curious as to whether you think that's a good or bad thing.
Okay, I got to think about this because there's a lot to digest there, and I'm just it's working its way through the system
through
right
the lower
now.
intestine. Yeah.
So I think that as I look at it, I think 2 things are true. The first is that Congress has, by the way, not just with anything related to the economy, but with a whole bunch of things, has kind of abdicated responsibility over the last 20 to 30 years.
Either to the executive branch or to the Fed.
Correct. So I don't think this is unique to that piece. It's generally a nice place to work, 6 months out of the year. You get some cushy days off and everything, nice pension. You can still trade stocks with insider information and stuff like that if you're a congressman.
You get to hear about everything, but don't actually have to make any decisions.
What a gig. Who wouldn't want to be there? Yeah. But with regards to the Fed, kind of exceeding its authority.
And I'm not saying they exceeded it necessarily, because nothing that they've done has been determined to be illegal, but they certainly expanded the authority.
They've expanded it, yes. I think that it is something where if you view what financial markets are today, and this is not my word creation, unfortunately. I wish it were, but it's not mine. Financial markets have become political utilities today. And what I mean by that is the main use of financial markets now is to talk about how well financial markets are doing. Okay, it's no longer just about, price discovery and, is this doing well or it's that. It's, no, we want to have a good stock market. And I'm not saying we should, want bad ones, but occasionally, you have to, let the crap go out in order to, actually have, good investments that are producing better, productivity and things for people. You don't want to just, support things that are unprofitable in perpetuity. That's not useful for anyone.
You mean capitalizing gains and socializing losses?
Yeah, generally that stuff kind of sucks. It's kind of what everyone hated from 2008. It's hey, all of the gains accrue to all the people on Wall Street, but now you're going to kick us out of our homes? That sucks. No, how come no one bailed us out? And the problem is that the Fed does, unfortunately, when they take action, it's often in that fashion.
Yep.
It's hey, a bunch of stuff is kind of blown up, and we're going to keep the financial system together in order to prevent the people that caused this blowing up from, kind of going under, because if they went under, the whole thing would go bad.
Yeah. Whereas Congress wouldn't have to make that specific choice.
No, to be fair, look, Congress can throw a bunch. In 2020, I kind of disagree with one of your premises, because Congress threw $4 trillion at the problem then, and arguably threw too much money at the problem, which is why we got at least some of the inflation that we got. But it was at least money coming out to the average person and not just going to, bailing out giant banks.
Right. There was not as much of a vacuum as there was in 2008, where, again, in 2008, I don't think lawmakers did enough or had enough.
Remember, the vote on TARP failed, and that's and then markets crashed, and they had to come back, and pretty much Bernanke and Geithner had to come in and be like,
get the job
guys,
done,
if
fellas.
you don't do this, we're not going to go to work. We can't go to work tomorrow. There will be nothing left. Yeah. So I think that ultimately, I'm a big believer that you want to treat the Fed the exact same way that you treat any other instrument of power in government, which is imagine the person that you think least qualified to run it running it, and restrict its powers appropriately. And so I don't think we've done a particularly good job of doing that in the last, again, kind of 40 years or so. It's been a long run to get to this point. And I think, unfortunately, our response when we see, institutions doing something we don't like, rather than saying, oh, like we need to pull back that authority. It's, no, we just need to get someone in new who will do it better. And
like in reality, most people act the same way when they're
That's
in power.
kind of like what it seems like here is it's like, hey, we don't like the job that Jay Powell is doing. We'll just get someone new. And well, maybe we need to rethink how the whole thing is actually being operated instead. Let's take a quick break. When we return, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Retirement comes with a lot of exciting freedom, but also with some permanent decisions. 2 of the most important ones are when to file for Social Security and how to set up your Medicare coverage. Claim Social Security too early and your monthly check may be permanently reduced. Missing Medicare enrollment deadlines might mean significant penalties and gaps in coverage. We have a new guide available called How to Apply for Social Security and Medicare. It breaks down when you can apply, what information you'll need, and how these decisions fit into a smart, coordinated retirement plan. Get your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person. But with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset, keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in negative territory after President Trump officially selected Kevin Warsh as the next chairman of the Federal Reserve. Right now, the Dow is down over 0.4% or 211 points lower. S&P 500 is off nearly 0.5% or 32 points lower. NASDAQ down by 0.2%. Russell 2000 is down over 1%. 10-year Treasury yield up 2 basis points at 4.247%, and crude oil edging higher. Not a lot of movement there, trading at $65.54 a barrel. Apple posted blowout iPhone sales and profit for the fourth quarter, with the tech giant saw revenue from iPhones climb 23% compared to the prior year. However, investors are concerned about rising materials costs for Apple, particularly memory and chips, due to AI data center demand. Apple shares are down over 1%. Meanwhile, Verizon beat revenue expectations and offered a bullish forecast, saying it expects to add between 750,000 and 1 million postpaid phone connections this year. Verizon stock jumping 8% higher. Elsewhere, SanDisk shares rallying 13% after the data storage maker posted quarterly results that beat expectations. SanDisk also offered a solid guidance that impressed. Footwear company Deckers Outdoor posted solid quarterly results boosted by Hoka running shoes, sending shares up by 14%. Visa beat earnings expectations driven by strong holiday spending by consumers. However, Visa shares down by 2%. And over to energy, where Chevron posted fourth quarter earnings that beat analyst forecasts due to record oil production. That stock up by 1%. On the other hand, ExxonMobil shares are off 1% despite the oil giant beating fourth quarter expectations. I'm Tucker Silva, and that is Wall Street Watch.
A couple other things that I want to discuss, just minor things that, as it relates to more logistical items for Warsh's nomination. The first is that in a post... was it on Twitter? Where the heck was it? Wherever it was. Hang on. I just want to find it just so that I can quote this accurately here. But in a post somewhere on social media, Senator Tom Tillis has indicated that he will hold up the Warsh nomination at this point until the investigation of the Federal Reserve is walked back by the Justice Department. So here's why this matters. I'll read his. It was a post on Twitter. Kevin Warsh is a qualified nominee with a deep understanding of monetary policy. However, the Department of Justice continues to pursue a criminal investigation into Chairman Jerome Powell based on committee testimony that no reasonable person could construe as possessing criminal intent. Protecting the independence of the Federal Reserve from political interference or legal intimidation is non-negotiable. My position has not changed. I will oppose the confirmation of any Federal Reserve nominee, including for the position of chairman, until the DOJ's inquiry into Chairman Powell is fully and transparently resolved. The reason why this matters is that Tillis is a member of the Senate Banking Committee. Now, if you're not familiar with the Senate Banking Committee, it has 24 members on it, and right now it's composed of 13 Republicans and 11 Democrats. in order to get someone to pass out of committee, you need a majority, which means at least 13. Otherwise, it's a 50-50 deadlock, and there is no tie-breaking vote. You don't get the vice president coming down to vote in this because it's a committee, not the full Senate. So what it means is that basically, if Tillis and every Democrat were to say, no, we are not voting for this person, it's a 12-12 deadlock, and the nominee does not get out of committee to the full Senate for confirmation. That's why it matters. Does this actually end up, becoming a problem? I have no idea. Like, I don't know where we're going to be 3 months from now. But this is something that, could potentially have an impact on this process, though I don't really know. And I suspect that there is some resolution that is come to before, this would become a real issue. So we'll see. The other thing that I did find interesting, or I guess just kind of comical this week, is it was 2 days ago when President Trump said that he was going to be announcing his pick for Fed chair next week. And today is not next week. And so, again, I think this is interesting just in terms of, like, what changed that made the president want to make the nomination this week as opposed to next week. And I don't have any great, like, theory as to this. I don't have any, like, idea why it would be the case. But I do think that something did, and I'm just trying to make sense of it because, markets have been moving quite a bit. There was a Fed meeting this week. There's a lot of stuff that has been going on, a bunch of earnings reports. There's been concern about the dollar and this and that. Like, did any of these play into the timing of the decision? That's just something that I think is interesting to think about. I don't really have a firm answer on it, but it was something that caught my attention in terms of, oh, gee, like, I wasn't expecting this until next week. Yeah. And here it is today. Like, I didn't think we'd be talking about this today.
Yeah, it's a fair point. I mean, clearly, it probably takes a bit of the wind out of the sails of what Jay Powell has to say over the course of the next week. But again, if you're doing it next week versus this week, yeah, Jay Powell had the mic, and people have been asking him a lot of those questions about what he will do next. So, yeah, there might be something to that, Chuck.
Let's talk a little bit about Apple earnings from yesterday. The fruit company went and posted revenue of $85.3 billion.
Is that good?
They're not a fruit company when they're selling $85.3 billion. $85.3 billion, that's up 23% from the prior year. So, again, like, just do the math. There's about 90 days in a quarter. That's almost $1 billion a day in revenue. Granted, it's the holiday season and everyone's buying, phones and iPads and this and that. But
does that sound like a budget-constrained consumer to you, by the way? I know that...
No.
I know that a lot's been written about how we're going to be, tightening the belt, but boy, did we not do so in the fourth quarter of last year with these types of iPhone sales, which is, by the way, the main thing that contributed to this growth.
Now, the big thing is that there are going to be higher costs that are coming for Apple, particularly, listen, if you're not paying attention here, this is something that I think is worth paying attention to. So, if you're driving, turn the volume up so you can hear us clearly. There's a very good chance that iPhone prices and other computer-related pricing is much higher in the next cycle than where we are today, specifically because of what's going on in the memory world, where computer memory, often referred to as RAM, rapid access memory, there's all kinds of different kinds, but basically the demand for memory to go into AI, GPUs, and things like that are going into data centers is absolutely through the roof.
Look, for a long time, Apple was, if not the single biggest buyer, really, one of the single biggest buyers and one of the only games in town for purchasing this stuff and had a lot of pricing power. Very suddenly, they are competing for all this stuff with Microsoft, Facebook, and
really with
NVIDIA on buying all this stuff up as quickly as possible. And guess what? They also have deep pockets.
And so it's just something where there's only a few companies that can make memory in volume. If you know anything about the memory industry, it's another place where capital goes to die because you just have these boom-bust cycles that are so intense, and this is going to be the most intense. And you listen to interviews from the CEOs of these companies, and they're like, listen, we've had to operate a certain way for the last 20 years because if we don't, we die. And now we've got so much demand out there, but we can't just pivot our whole business that quickly because we know if we do, this won't last forever and we will die as well.
Right.
And so it's just something where the demand for memory right now is dramatically greater than supply, to the point where, like, you look at one of the big suppliers of memory, which is Micron Technologies. This is a company where you pull the chart up and just take a look at it. The stock went nowhere for the better part of 20 years and now has gone up in the last, let's see, I want to just make sure I get the time period right. In the last 6 months, the stock has quadrupled now.
That's pretty wild.
Okay. Since September, actually. So the last 5 months, the stock has quadrupled. And this is because, like, they are just able to charge an arm and a leg because they have so much competition, so much demand for what they produce with very little competition. The other companies that are in this, whether you're talking Samsung, SK Hynix, like, there's a few of them, but there's a small number of companies that produce this stuff. There's a ton of demand, and so this is what you get is prices going through the roof. Don't be surprised if in order to maintain margins, Apple has to raise iPhone prices a couple $100 next year. And if they don't want to maintain margins, it's absolutely going to eat through the margins they have. A good story on this, just to tell you like where it is right now in terms of how ridiculous the memory pricing has gotten. Y'all know Costco, right?
I've heard of them, yeah.
They sell stuff.
Yes.
Lots of it.
Yeah.
One of the stuff that they sell,
okay,
glad you picked up on that. One of the stuff they sell is computers. And in computers, there's memory.
Yes.
They have removed all of the memory from their display computers to prevent people from stealing it.
Wow. Yeah.
That's where we've gotten to.
Yeah. That's
is
something.
You can't have actual memory in the display computers because people have been
will
stealing
tear it out. Okay.
Let's take a quick break. When we return, we'll talk about some IPO plans after this.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. please visit dav5k.boston. That's dav5k.boston.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Chuck, guess what day it is?
Friday, January 30th, 2026.
Last weekday of January, and therefore the last opportunity we have to talk about the guide from Armstrong Advisory Group for January, which is all about how to claim Social Security and Medicare. We talked to you about this one a couple times before, but it is the end of January, and therefore your last opportunity to get your hands on this thing. And I think really the point that I would make about this one is these happen to be some of the most common questions that any financial advisor gets. How do the rules work? If I'm in my 50s plus and I'm heading towards this age, what do I need to be aware of? What sort of documents do I need to have?
Well, how do I actually do it? Like, people always say, like, hey, here's the age that you should sign up for Social Security. And then it's kind of like, well, how do I sign up for Social Security?
And this, it's like, it kind of reminds me of the Office episode. You can't just declare bankruptcy. You actually have to go and do something. You can't just claim Social Security. I claim Social Security. That's not how it works.
You just write them a letter,
right?
You know?
So this guide goes through it all the key dates that you need to be aware of. And then finally, the financial considerations that go into these decisions about Social Security and Medicare when you are talking about it in the context of your greater financial plan. If you would like your free copy of our guide, like I said, last few days of the month here, last opportunity to get your hands on our free guide on Social Security and Medicare. Two ways to request it, as always. Call us at 800-393-4001 or go to armstrongadvisory.com to request it there. But it's our free guide on Social Security and Medicare. If you are heading to that stage and you have questions, this is the guide for you. It's free. 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
We've got a few different IPOs that now are being talked about in the AI space for this year. Wall Street Journal exclusive saying that OpenAI plans a fourth quarter IPO to try to beat Anthropic to market. You also had reporting from, I think it was Reuters yesterday, that SpaceX is reportedly trying to buy XAI en route to trying to IPO itself.
Mm-hmm.
And so I got to be honest, all I can think of is everyone wants to head for the exits. It's just a rush to get there, given the scale of this. And it's compounded specifically by this piece here in the Financial Times that I sent to Tucker yesterday, because I was like, we've got to cover this. And
the first sentence I can relate to: internet companies are in denial about getting fat. Same.
We've all been there. We've all been there. But here's the thing, is that ultimately companies, these companies right now, I'll use Meta as the example, they're going to be spending about $130 billion on CapEx this year. And what you end up with then is that you have depreciation that has to be taken over the useful life of that piece. I'm going to just read a couple things because I think this spells it out more clearly than I would be able to otherwise. And basically, here you go. Though depreciation is a non-cash cost, the money having already been spent, any change to useful life assumptions has a big effect on GAAP income, GAAP, generally accepted accounting principles. So basically, your depreciation comes through to your income. For example, Google owner Alphabet raised earnings guidance in 2023 by $3 billion by increasing the longevity of data center equipment by a year or two. So you can manipulate your earnings by changing your assumptions there, which is not necessarily wrong. Like, I'm not saying there's anything nefarious. It might be, hey, we figured out a way to make our stuff last longer, and so great, you can do that. The second problem relates to timing. The value of a data center under construction is held on a company's balance sheet, but depreciation is only being applied after it becomes operational. Data centers take years to build, so the delay between a capital outlay and net income deduction can be very long. So just because you're building it, it doesn't start depreciating right away. It's only once you start operating it. Also, CapEx adds to a company's book value, showing up immediately in the cash flow statement. Sorry, I know this is accounting on the radio, but it's important here. And so it doesn't have a parallel increase in depreciation expense on the income statement. Comparing the former with the latter will exaggerate the average asset longevity. And basically what you end up with here is a situation where you're getting to the point now where depreciation as a percentage of revenue for basically the last 10 years was running like 5 to 10% for a lot of these companies. It's going to start becoming between 20 and 35%. So a huge chunk of revenue is now going just to depreciation for stuff you've already built. If you don't get a corresponding revenue increase, your earnings go down.
I mean, fundamentally, one of the major things that has made companies like Google, Meta, and others so incredibly attractive is that they are able to run these massively profitable businesses because of this exact factor. They haven't needed to spend a ton of money on this type of infrastructure build out. When we talk about capital intensive businesses, we often criticize them as terrible businesses to run, right? The auto industry, the plane manufacturing business, they are really difficult businesses because they are so capital intensive that one misstep leads you to a wrong place, and that has not defined these companies in the past, and suddenly is starting to.
The other thing is we continue to see more and more new releases that lead me to believe that the actual models that are being run here are being commoditized as they become more and more similar. You don't want to be anywhere near a commoditized business, especially a CapEx intensive one. The place that I think it's becoming interesting to look at is the stuff produced by those models, the different apps and software and stuff that you can produce there, which is probably why software stocks are getting whacked to start the year.
Yeah.
You're getting to the point where there's some really interesting stuff going on there. But what if, again, we've talked about everyone's being priced in as a winner. What if the model makers are not the winners, but it's the stuff produced by the model that ends up being the winner? Why would you want to own the company that has to produce the model?
A lot of layers to this.
There's a lot to look at here, and I think it all points to why these companies are trying to IPO now. Let's take a quick break here. We got hour 2 coming up in a little bit.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Have you saved enough for retirement? This is Mike Armstrong from the Armstrong Advisory Group. The advisors at our firm have 150 years of combined experience in the financial services sector, and they all work together to help you develop a unique financial plan that offers investment management, financial planning, tax strategies, and retirement planning. It's our goal to help you position your assets and give you peace of mind. Having a solid retirement strategy and investment plan becomes more important as you age, so visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Just click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us develop a plan to help you secure your financial future. Again, that's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled How to Apply for Social Security and Medicare. Mike, when we talk about actually determining when to apply, there are a few different factors that go into it, but I think really the specifics of, hey, if I want money at date X, when do I apply is kind of at the crux of this.
Oh, sure. And, oftentimes when you go to apply, they will actually tell you that they're backdating your application to the date that you apply. And so your first check might include a few checks of Social Security. You do have to be specific about when you request the actual start date. The good news is you do get a prorated increase for, we talk about this in years, but you do get a prorated increase for every month that you end up delaying your Social Security benefit. And you can be highly specific about when you actually want the income to start.
How does one go about determining what age they actually should start Social Security?
Yeah, look, every actuary out there will tell you this is all a life expectancy question and calculation. I'll tell you there's more to it than that, but it is highly specific to each individual. When am I retiring? When is my spouse retiring? When do I actually need this money to kick in? And what is my backup plan for covering my expenses if it doesn't kick in right away? So yes, life expectancy, a major factor in the decision, but there are other questions to be answered as well.
Our guide is titled How to Apply for Social Security and Medicare, and the ways that you can request it, there's two of them. First, you can call 800-393-4001. The second way, you can go to armstrongadvisory.com. Again, that phone number is 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. From the other law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here on a Friday as we wrap up the last trading day of January in markets. Obviously, they'll be closed tomorrow in observance of Saturday. And so they will be. In any case, big news today. The Federal Reserve is going to be getting a new chair in May. and President Trump nominated Kevin Warsh to the position. Warsh had previously served at the Federal Reserve following an appointment from George W. Bush back in 2006. He's been one of 3 or 4 candidates, 2 Kevins and several other people that have been talked about as a potential Fed chair over the last year. And this morning, President Trump announcing that Warsh indeed is his candidate.
Can I just say something? That being appointed to the Federal Reserve by the president at 35 is pretty impressive.
It is.
I'm feeling rather unaccomplished at this stage to be looking at that and say, 35 years old, appointed to the Federal Reserve by the president. Yeah, pretty cool.
Could be worse things in life. You know? So I don't know what you get on the speaker circuit at that point if you're not, the chair, but I would imagine that Warsh has done, pretty decently for himself, all else, all things considered. So that is the big news today. Confirmation hearings likely to take place in the coming weeks and months. But Tom Tillis, who does sit on the Senate Banking Committee, has indicated that he will oppose any nomination while the criminal probe into Jay Powell is still ongoing. And so we get a little bit of drama there because effectively Tillis has the ability to prevent the nomination from getting out of the Senate Banking Committee for the foreseeable future if that is indeed the case. So we'll see where things go there. In markets where things are going today, kind of all over the place. Really just choppy, messy trading. Not ugly, but just like all over the place. Dow is off about 300 points, about 2/3%. S&P is down 24 points, about 1/3%. The NASDAQ composite down about 0.5% or 100 points. So you got equities broadly down, being supported by a couple key names that are still, finding some ways to float today. Tesla up about 5%. Broadcom up 1.5%, Eli Lilly up 0.5%, NVIDIA up 1/3%. So that's kind of keeping the market together today as we look at it. When we take a look at the bond market, little bit of a sell-off there. Nothing big, but 2 basis points towards the upside, up to 4.247% on the 10-year Treasury. We've got the dollar index rebounding after a few days of selling. It looks like, at least in the short term, dollar trying to find a bottom at 96.625. Then we come to precious metals. And honestly, we don't talk about precious metals a lot on this show because I don't really have that much unique insight about gold or silver because it's not my game. It's not something I specialize in, and so I don't have much to say.
And also, they don't usually move by 10+% in a single day.
I got to say, what we've seen in silver in particular this week is something that stuff that I've never seen before in my entire life. And again, I haven't been doing this forever, but I've been in this business for almost 17 years. And I've never seen what I've seen this week in silver. So here's the thing. At the beginning of this week, if you came in on Monday and you saw silver at $117 an ounce and you said, "Man, that's rich. I'm gonna short that and bet against that." You've now seen 3 12% drawdowns. I'm going to go just through yesterday. Through yesterday, you've seen 2 12% drawdowns on silver. And you still were not in the money on that trade because of how quickly it rallied after those. As of today now, you've seen 3 drawdowns of at least 12% this week, and silver is flat from last Friday. I have never seen markets moving like this in anything that's not Fartcoin.
Quite honestly, I mean, we talked about the volatility in commodities and silver especially and how memey it was seeming, and these types of price moves kind of echo that type of mentality.
They do, and here's the thing that I also, not my original statement, generally when things go parabolic to the upside, they don't usually just correct flat and not move from there. You tend to see some volatility as these things unwind. There's so much interest right now that, look, this thing still might not be done. I have no idea. Again, this is not my area of expertise, but things just can't move up 8% a day forever. It's a good rule of thumb. If you're lucky enough to participate in one of those things, be finding the exit doors to the casino on your way through it because you just, you never know when it's going to go against you. Other things that we are seeing in markets right now, we've got crude oil. up another 18 cents a barrel to 65.60 at the moment. And so that is what is moving in markets today. Piece in CNBC. Wealth inequality and the K-shaped economy are more striking than ever, data shows. I'm about to have to push mute on the phrase K-shaped going forward. And again, I'm of the opinion that I think we've reached peak affordability concerns sometime, like just general affordability concerns, sometime in the last quarter or so. The K-shaped piece might continue to be a problem, but I just can't keep saying K-shaped. Like it's becoming problematic for me for that to just become the way we refer to this forever.
So then, do you want to shift over to inequality and actually talk about that? Because that's K-shaped isn't really something that we can easily measure, but
K-shaped, we were talking about it like coming out of the pandemic, and we were like, hey, people on the high end of the income spectrum have been recovering faster than the bottom, and that's what it meant. We didn't use it.
Now it applies to everything.
Like, you can't just be like, oh, like, this is K-shaped. It's like, no, like, unless you want everyone to make the same amount as everyone else, then there's always going to be some kind of skew.
But is that elevated? And so we have a measurement called the Gini coefficient.
Yes.
And this does not measure wealth inequality, by the way, so it's not a perfect measurement, but it is a statistical measure of inequality used to represent either income or wealth distribution, but as we measure it, it's generally income distribution. And we have a measurement of this, and we have a measurement of it from the World Bank going all the way back to the early 60s here in the United States. And so this is an index. The way that you think about it would be if one person held all the income in the entire country, like if Jeff Bezos suddenly made every dollar in the entire United States,
if we
and
actually
nobody else
became
did,
the United States of Amazon,
then the coefficient would be 100. If every single person in society had an equal share of all the income in our country, the index would be 0. In 1963, when we have data going back to, it was 36.7.
What is it now?
It is now 41.8. Most recently in 2023 is the only data that I have here. So a few years old. We got as low as 39.7 in 2021 when we were just throwing money at people, like hitting them in the head with money back in 2021. And that equaled out some of the income inequality. By the way, that number was the lowest that you had seen it since the early 90s. So it's been elevated for some time now. But I think it is fair to say, if you want to measure income inequality and, actually measure it, you're seeing some of the worst numbers, about the worst numbers on income inequality, less equal distribution of income since we've had tools to measure it in the 1960s. And that part's true.
I have a counterpoint to it.
Go for it.
Because the Federal Reserve does a quarterly survey on wealth distribution.
Sure.
And they basically look at what percentage of wealth in the U.S. accumulates to the top 0.1%,
mm-hmm.
the top 1%, top 10%, 50 to 90%, and then the bottom 50%. Okay. They started doing this back in 1989, so it's not as long of a data set as what you described, but it still is, almost 40 years. It's like 37 years of data, which is pretty darn good. It's darn tootin' if you might, engage with me. So the bottom 50% of wealth owners back in 1989 held 3.5% of all U.S. wealth.
Okay.
Today they hold 2.5%, which is worse, but again, it's not that there was much to go on then, but worse. But just hear me out for the full thing. The 50 to 90th percentile holdings in wealth accounted for 35.7% of all wealth in 1989. Today, it is 29.4.
Dropped there as well.
So between those two, it's about a 7% drop.
Mm-hmm.
The 90 to 99th was 38% back then. Today, it is 36.4.
Dropped there.
The top 1%, 90th to 99.9, was 14.3 back then. Today, it's 17.3. It went up a little bit. The top 0.01% went from holding 8.6% of the wealth to 14.4. So really what we're talking about here is not that the family making, $125,000 has gone from, has been able to accumulate so much more wealth. It's really that top 0.1% of households, which, remember, there are about 170 million households in the country. And we're talking about the 0.1%. So the top 170,000 households in the country
have dramatically increased their wealth.
Have basically almost doubled their share of wealth. And everyone else is just kind of treading water with what's left out there.
Doesn't say anything about how much total wealth in the United States has increased over the last 40 years. And that's an important consideration, too, because the proportion of a larger pie is still a larger piece of pie. But nonetheless, this is, I think, what people focus on when they talk about how the United States has changed over the last 40 years.
I want to talk more about this because I think this is an interesting topic to dig in on. We can talk more. It's our show, right? We can discuss.
It is, but Todd's going to join us next.
Does he have to?
He does.
Okay.
We love Todd.
Okay,
Todd will be joining us next. We're going to play some trivia, and then we will talk a little bit more about wealth and income inequality.
Okay, sounds great.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
All right, we're now joined by Todd Lutzke from the law firm of Cushing and Dolan. Mr. Lutzke, thank you so much for joining us today.
Oh, always a pleasure. Thanks for having me.
Todd, if someone is considering planning, estate planning with long-term care concerns front and center, what's the right age for them to start making those plans?
Yeah, so when you're talking about nursing home planning, it's age-related for sure because it takes 5 years in order to protect the assets from the cost of nursing home care. So advanced planning is always better than last-minute planning, but in my head, and again, I don't have any legal number to give you. I'm just going to give you my sort of rule of thumb. My rule of thumb would be, 60 and over. When I meet people 60 and over, I can't help but ask when I'm saying, what are the objectives we're trying to accomplish today? Probate, taxes, bloodline planning, those always come up. But then I throw in, do you want to protect assets from the nursing home if you're 60 and over? Because then you figure at 65, it's in your rearview mirror. Or 70, if you start at 65, it's in your rearview mirror. And that's a good place to be.
What if you haven't done planning at those ages? What if you're through that ideal window? Is it still, worth doing, or what are the considerations then?
So I think maybe what we're talking about is, yes, I don't care how old you are. If you haven't gotten sick yet and you're not in the nursing home, yeah, I think getting the clock started is always a wonderful thing to do because you're always going to be better off having that clock running than not having that clock running. So there's more options that can be done last minute. However, you could also just be faced with nursing home care admission, meaning, hey, I'm going in and either no planning was done or maybe we did some planning, but there's assets outside the trust that still need to be protected. And there's things that can be done last minute. So I just want people to know that if you're faced with that last minute things, please don't just write the check. And folks, along those lines, that's exactly what this guide is about. We are at the end of the month. It is going to be put away. Long-term care planning for procrastinators is going to help you figure out what to do when you're left with that last-minute situation. How do I protect these assets from houses to vacation homes to rental properties? They're treated differently. Some are countable, some are non-countable. How do you make countable, non-countable last minute? How do we use annuities and pooled trusts to save money if we're beyond our limit in terms of how much we're allowed to have? Don't just write the check, folks. Call and get the guide. It's good for married couples and single people because there's different rules. Let me give you the number, 866-848-5699 or legalexchangeshow.com. You can download it right there. Again, 866-848-5699 or legalexchangeshow.com, and you can download the guide there.
Mr. Lutzke, thank you so much for joining us.
Always a pleasure. Thank you.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Time for trivia here on the Financial Exchange, and today is Christian Bale's 52nd birthday. Christian Bale portrayed one of the key figures of the 2008 financial crisis in the 2015 film The Big Short. So, trivia question today is simply, who did Christian Bale portray in The Big Short? Once again, who did Christian Bale portray in The Big Short? Be the 8th person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the 8th correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Mike, I want to just do a little bit more discussion on this K-shaped economy thing.
Yeah.
And we covered in the last segment that basically what's happened in the last 35 years, if you're not in the top 0.1%, overall, like, you're not really, in the aggregate gaining or losing very much versus any other group. It's just that top 0.1% has eaten up a lot more of the wealth in the country. This is what we're talking about from a wealth perspective.
Yes, that is, by the way, not purchasing power compared to inflation. That is share of the total wealth pie.
Yes. What I will make the case for in terms of, like, why do things just, like, feel like worse economically than, like, 30 years ago? There's a couple things going on, in my opinion. The first is, look, we do always get nostalgic for, like, how things were when we were younger because we forget about the bad parts. So there's some of that. The second piece is the main place where I think we feel this is in things that have a very fixed supply in terms of how much they can provide out to us. The reason why, just as an example, tickets to go to, large sporting events or big concerts are so expensive now, in my opinion, is there are fewer venues that actually you can see live music. I think about, like, all of, like, the small ones that have closed recently, and populations have grown. It used to be if you had, a 20,000 seat venue in a city of 1 million people, okay, like, that's great. Now that same city has grown to 1.5 million people, but there's still only 20,000 seats. You've got more people competing for the same fixed supply of goods. It's the same reason when you go to the beaches in the summer, you can't make more beach space. There's more people now than there were 30 years ago. And so, yes, it is more crowded because, like, you just have more people trying to get there as well. And so that
demographics, not an economic
issue. Yes, it's a demographic piece, in my opinion. Quick break. Trivia answers next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums. premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets trading lower after President Trump officially selected Kevin Warsh as the next chairman of the Federal Reserve. Right now, the Dow is down nearly 1% or 462 points lower. S&P 500 off 0.5%. NASDAQ down by nearly 0.2% or 142 points lower. Russell 2000 is down over 1.5%. 10-year Treasury yield up 2 basis points at 4.249%, and crude oil up 0.2%, trading at $65.86 a barrel. I just blanked out there. Okay, here we go. Apple posted blowout iPhone sales and profit for the fourth quarter, with the tech giant saw revenue from iPhones climb 23% compared to the prior year. However, investors are showing some concern about rising materials costs for Apple, particularly memory and chips, due to AI data center demand. Apple shares are down over 0.5%. Meanwhile, Verizon beat revenue expectations and offered a bullish forecast, saying it expects to add between 750,000 and 1 million postpaid phone connections this year. Verizon stock rallying 9%. Elsewhere, SanDisk shares are jumping 13% higher after the data storage maker posted quarterly results that it beat expectations. SanDisk also offered a solid guidance that impressed. Footwear company Deckers Outdoor posted solid quarterly results boosted by Hoka running shoes, sending shares up 15%. And Visa beat earnings expectations driven by strong holiday shopping spending by consumers. However, Visa shares down by 3% now. I'm Tucker Silva, and that is Wall Street Watch. And the trivia question we asked in the prior segment was, who did Christian Bale portray in the movie The Big Short? That would, of course, be Michael Burry. Hal in Austin, Texas is our winner today. Listening on iHeartRadio, is taking home a Financial Exchange Show t-shirt. Congrats to Hal. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Want to talk about this piece in Bloomberg Opinion. Florida is giving housing optimists reason to buzz again. And it does seem like we are starting to see maybe the first signs that normalization is getting close to being done in Florida. You still do have inventories up about 5% year over year, but in January, those are basically flat relative to the prior month. You do still have home prices that are falling in the major metro areas in Florida, whether you're looking Miami, Tampa, Fort Myers region, Jacksonville, like basically anywhere you see that happening. But it is something where you've got inventory that is coming back onto the market at the same time that mortgage rates are down a little bit. The pricing is more reflective there. And so, again, it's not a great market yet, but it is one where you can see the path towards, Florida housing starting to see some signs of growth probably 9 to 15 months from now. And so, again, we've been going through this housing, just slowdown for almost 4 years now. And it seems like in Florida, it's starting to get ready to turn the corner. The piece you have to remember, Florida was on the cutting edge. Florida's always kind of on the cutting edge of anything that's happening in real estate pricing and activity. It moves first to the upside and it moves first to the downside. It's just where it tends to go. And so even though you're seeing some improvement there, if you're a listener in the Northeast or the Midwest, you're nowhere near this. You still have big inventory builds that need to happen, big pricing adjustments that need to happen, and that's going to take a couple more years for this to play out. But I think it continues to get me back to where I am, which is the years of 2027 through 29 will be when, depending on where in the country you are, this normalization process is completed and housing can start to become a positive force for local economic growth again instead of a drag on it.
Yeah, the other piece about Florida, too, if you're seeing that stabilization, it may be enough for home builders to return. Not right now, but I'm saying
sure.
As a home builder, when you looked at the data in Florida, Texas, Louisiana, all the places you like to build homes if you're one of the giants, you're saying I can't put new inventory into this market right now because I'm not sure how much more prices are going to fall. I don't know how to price. I don't know how to build under these conditions. If you have this stabilization actually holding, then yeah, you might see some recovery there.
So that's kind of fun. Let's see.
I want to talk about potato chips, Chuck. Is that all right by you?
I love potato chips.
I know it's close to noon, so I don't mean to tease you, but Cape Cod potato chips are losing their only remaining Massachusetts manufacturing.
They won my
plant.
family's potato chip taste test that we did
a
few years back. Yeah.
Okay.
If you ever want to make yourself sick.
Was it blind?
It was blind.
Okay.
And we did, I think it was either 15 or 16 different chip brands.
That's too many.
This went better than the cottage cheese taste test that we did.
Oh.
Where it didn't eat it for about a year after that.
Yeah.
That's awful.
But, Cape Cod came out ahead, and no one was expecting it,
well,
honestly.
In any case, the company is now owned by the Campbell's Company, better known for their soups. They had one remaining plant on Cape Cod, and the 49 employees there will be losing their job. And I don't think this is terribly surprising. It's a shame in Hyannis that this will be closing. But where on earth would you live if you had to commute to a Cape Cod potato chip manufacturing plant? Because I just can't imagine a higher cost area of the country to manufacture something. It'd be like, it's kind of akin to doing manufacturing in New York City.
Yeah, we're gonna set up a factory on Martha's Vineyard.
I can see why they have to close this. You cannot possibly have an easy time.
Where are they going to make them
finding and retaining talent? They already have a bunch of plants in Wisconsin, North Carolina, Pennsylvania that already produce the majority of these chips. This factory was doing like 4% of the total.
So I've been eating
Wisconsin
chips.
Correct.
Yeah, Cape Cod, Wisconsin.
Yeah, they've got another one there.
Yeah, it's just like Paris, Maine, you know? Yeah. You've seen one of them, you've seen them all.
Right.
So, again, a shame, but economically, you hear this from business owners on the Cape all the time. Like, what firefighters, police officers, have a tough time finding them. You know why? Because it's pretty expensive to live down here.
Are they going to have to change their name?
No, man.
No, it's a brand.
It's a brand. Cape Cod potato chips. Doesn't matter.
I know it is, but doesn't it feel kind of wrong?
It does. It's a shame.
It is too bad.
I wanted to go on that tour, too. That'd be fun.
When are they closing?
You had 40
April.
years, Tucker, and you missed out, so.
I know. I've been busy, Sorry.
Okay, I guess there's that. Let's see. What else do we want to cover here?
Building affordable housing requires tackling insurance costs. I wanted to start there for a moment. And Bloomberg, while I hear you, let's try one thing at a time, okay? Like, if you want affordable housing, you have to build houses first, and then we can talk about whether our laws adequately deal with the problems with insurance. But I mean,
it's all supply and
Cart
demand.
horse.
Like I just don't think we get it sometimes. If you just keep trying to give people more money to buy housing, you will not improve housing affordability. In fact,
every day we cover something like this. Well, if you could just bring down those insurance costs and, make it so that people can't so easily sue insurance companies, then we would fix the housing affordability. No, build more houses.
Well, and wait a minute. You want to make it harder to try to go after insurance companies?
Yeah, because people love how difficult
Tucker,
it is
talk
to
to me
do.
about like how things have gone for you with your car lately.
Just swimmingly.
It's been a month. Have you gotten a check yet?
I got it last night.
Okay, but it took a month.
Over a month.
There you go.
And they didn't give me attitude unexpectedly for whatever reason. It was great. They were super polite to me.
I sense a little sarcasm there.
Yeah, just bombarding me with just attitude. I'm like, hey, I got hit here, buddy.
So yeah, I think
fixing the insurance problem that people admittedly have with their homes, with prices going up, will not fix housing affordability.
No.
So you're welcome to focus on this, but if you want to fix housing affordability, build more houses.
Speaking of insurance, we're going to take a quick break, and when we come back, Paul LaMonica from Barron's is going to join us to talk about UnitedHealth right after this.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. From the other law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better,
Stronger, more powerful.
we have each other.
When we come together and go red,
The more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Planning is well underway for the 2026 DAV 5K. The event sold out in record time last year, so head to dav5k.boston and for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans in the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
As promised, we're now joined by Paul LaMonica from Barron's. We're going to be talking a little bit about UnitedHealth. Paul, how you doing today?
Good, thanks. How you guys doing?
Better than UnitedHealth stock earlier this week. What happened?
Yeah, the revenue missed forecasts a bit. The guidance wasn't great, but then you also had the news from from Washington about President Trump proposing that the reimbursement rates for Medicare Advantage aren't going to go up all that much, and at least the proposal for 2027. And I think that really spooked a lot of investors. And we saw not just UnitedHealth shares tumble on that news, but CVS, which owns Aetna. You saw Humana get hit. A couple of the other smaller, Medicare-focused insurers like Centene and Molina also, getting hit. Anthem owner Elevance as well. So it was just a very difficult time for the insurers, in light of that. And, UnitedHealth now, it went from being the darling of the Dow, the company that had the highest price by far, to, kind of middle of the pack. But it still has a high enough price that it impacts the Dow. Because what was interesting on, the news was the rest of the market held up relatively well.
Paul, help me reconcile these two ideas then that are in my head. For pretty much the last 35 years, one of the most consistent investments in terms of performance has been health insurers, specifically UnitedHealth. Like they just cranked from basically 1990 onward. How do I reconcile that with the fact that now this is a pretty hostile environment for insurers across the board, not just looking at health insurance, like everyone's talking about insurance costs. And we're talking about, capping them and figuring out, reimbursement rates and this and that. Is this a fundamentally different environment than just a year or two ago? Or is this just a little, not little blip, but, some kind of speed bump and then these guys resume their regularly scheduled programming.
Yeah, I don't know if this is going to be, the industry getting back to the way it used to be. I mean, you have a pretty vocal, anti-insurer sentiment, I think, in DC, and this is bipartisan. This is by no means just President Trump and the Republican Party. I think a lot of Democrats, clearly are very hostile towards this industry as well, and is something that is a very easy political win, because you're not going to find too many people who look at their doctor's bills and say, yeah, I love my health insurance.
Wish I could pay more.
Yes, definitely. They deserve a lot more. This is not something that I think is going to change anytime soon. I just find it interesting from a broader market perspective that, as big as these companies are, they're not cratering the entire market. And even there are pockets of the healthcare sector that have been doing well lately, even though there have been broader concerns about drug pricing and drug approvals because of RFK Jr. As the Health and Human Services Secretary as well. But you're seeing obviously the GLP-1 companies doing quite well, and I think there are other pockets of the healthcare sector that are bouncing back also. But I'm not sure that the insurer is going to take part anytime soon.
Very good. Paul, appreciate you joining us today. Hope you have a great weekend, and we will talk to you in February.
Great. Yes. Looking forward to next week, just before some football game, I think, coming up.
Yeah, Super Duper Bowl. It's going to be a big one. So
exactly.
Appreciate it, Paul. Have a good one.
Yep. You too. Have a good one.
That is Paul LaMonica from Barron's talking about UnitedHealth. Mike, what else we got that we haven't gotten to?
The CEO of the country's biggest crypto company, Brian Armstrong, no relation, was at Davos last week. And when anyone is capable of making giant bank CEOs as angry as Brian Armstrong apparently has, I just find that to be interesting, and it might be an indication that you're doing something right. Allegedly, according to the Wall Street Journal, Brian Armstrong was giving an interview or speaking with the former UK Prime Minister, Tony Blair, when JP Morgan Chase's Jamie Dimon cut in and said, "You are full of expletive." A word I cannot say. Now, granted, there might be more context. I don't know how he cut in, but a pretty aggressive move from the world's... Is JP Morgan still the world's largest bank? I believe so.
I believe so by deposits.
The CEO of the world's largest bank to cut in and say something like that. Now, so for context... Brian Armstrong has been out there lobbying Congress and very specifically going out on media and saying that the banks are trying to prevent what he wants to do from happening. And crypto fans are a rambunctious group. And so I'm guessing that many of these CEOs have been feeling pressure on social media and potentially even threats from people who have expressed their skepticism of what the banks are trying to accomplish. But again, what Armstrong wants to do here is play in the bank's backyard and basically offer a lot of bank products without being regulated as a bank, and I think has stirred the pot on this subject quite a bit. But when you do something enough to make some of the most powerful men in the world really upset with you, I just find that to be fascinating, especially in this type of fashion, because Jamie Dimon isn't exactly famous for intercepting somebody and saying you are full of expletive.
Two things are probably true at the same time. The banking industry could use a little bit more competition.
Yeah.
And
Brian Armstrong might be full of expletive.
No, I wasn't even going to go there. And that competition in terms of like stability on deposits probably shouldn't come from the crypto space.
Yeah, I think both of those things could be true.
Like there's middle ground somewhere. I don't know where it is exactly, but look, all these big banks should be broken up and forced to compete, actually.
Sure.
And I don't know if you want an exchange that trades fart coin to be, paying out interest without regulation.
Both of those things can be true.
It's just kind of
That would be the pendulum swinging very far in the other
right,
direction.
like that would seem to be like we're very much back to pre-financial crisis when you can start doing things like, my crypto portfolio is AAA rated because they've securitized my fart coin with my rabbit coin or something. Like, okay, like we're getting off the rails a little bit. We're done for the day, done for the week. Hope you all have a great weekend. We'll see you on Monday. It's first February trading day of the year. Get excited. Jobs report next week, too.